Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So I came in this morning with like 6 longs, thinking that today or this week maybe we get a little bit of markups because it's the end of the quarter. Usually you have a strong quarter. The last week they don't let things fall apart because they want to mark them up for you know who, the people out there who get the statements to make them all happy, so they keep putting their funds in. So the day unraveled. You know, tech opened up really strong. A lot of things went from what I say green to red, and then some even below prior day's lows. So we saw some ugly candles in tech. Some guys like, how do you maneuver so fast? How do you, have such quick feet? You know, especially considering you thought maybe we were going to hold up and go. You know what? I have a process, and it's a process that I try and teach to you guys. You know, first things first, when things open up, I try and talk about how I manage my position. So when I have 6 longs, just say even like Apple for one. You know, Apple was up $1. You know, I'm tweeting already, ready to Redler all access that I sold some. Why did I sell some? Because I also thought that it would get some resistance at the 50-day, which was close to, let me just go get the chart while we're doing it, because I don't have a lot of time for everything. But, you know, I just want to show you the process, because people are like, how do you actively trade? How do you have such quick feet when you need it? Well, if you're planned, you can. Why would I have thought that you could see some resistance around here? Well, here is where the 21-day and the 50-day was. Okay, that was as high as 148.30-ish. So there was 2 things that could happen today. It could have went above 147.16, stayed above it strong, and gave you a nice wide range bar, and then maybe continued, or it opens up above it, makes a 5, 15, 30-minute high, and then all of a sudden you see some things start to go red. You know, whether it's Amazon or Google or Nvidia, other names that have been strong, gives you some clues. So I always sell some strength, and then this was a pivot level for me, this 147.16. I thought to myself, if Apple's any good, it should hold above this. Okay, so sell some strength, sell some when it gets below this, and then when it went red, I get out of the rest. And now, for the first night in multiple nights, I am not in Apple. Okay, why was I in it to begin with? Well, you had a little bit of a red dog reversal right here. So I thought it held for 3 days and maybe it could push up into the moving averages, and it did, but it got rejected first time. So now we'll see what happens tomorrow. Okay, I'm gonna go through a few of these just to let you know the thought process. Next one was Amazon. I was long Amazon overnight. I actually bought some pre-market, I think around 106.5 to 1,006.5, thinking, okay, today's the day, maybe it gets above 1,007, gets to 1,016, and then, you know, maybe it gets marked up and we have a great weekly trade. But what happened, okay? Came in here, it was trading at 1,009 and change, and then all of a sudden some things moved up, and it was actually getting offers in there. So I'm like, okay, let me sell into some strength, and then wait and see how it acts. You know, if it's going to go red, it goes red, get out of the way. So if you look now at Amazon, okay, you look at the chart. Basically, to me, it went from looking as if it could potentially break above this spot, okay, because it was a leadership stock, and why not? It's Amazon, and make a new high going into the end of the week. Instead, it opened up as if could not hold a momentum level. So when I say stock opens up and then can't hold a momentum level, this is 1,007. So if you're playing it for momentum, to keep momentum, once that momentum level doesn't hold, you get out of the way. So right there, when it went back below 1,007, I probably should have sold all of it, but I gave it a little bit of the benefit of the doubt. So I sold the rest of it when it went red. Some people would wait to see if it holds, just say 2 prior lows, which was 998 and 997. Or some might say, hey, I'm giving it to the 21-day. Either way, this is a pretty ugly candle. You have, you know, a high. This I don't believe is a real trade. This was like, you know, a flash trade. And now you have maybe a lower high. So at this point, it's one of those engulfing candles where I'm like, you know what? Some guys will probably be short this overnight. I'm not going to be short it just because, you know, if it was up in my grill, I would be unhappy about it. But I'm not going to be long in the face of this. I'll wait for some price discovery and see what happens here. If you go to your 5-minute chart, you did have some time. If you look at the way it opened up, you know, look at the way it, oops, sorry, let's see if I can get back to my chart here. Hold on. Let's see, Freddie, come over here. Let's go back to the charts. So as I get my tech guy to come in here and help me, we'll get right back to where we were. I'm going to continue to talk you through. So obviously, you do see a morning wedge type pattern, okay, which is what you had here in the Amazon. Okay, so let's go back to it. Here is Amazon. And then when you break it down into a quicker time frame, you go here to your 5-minute so you could see. So here was your gap up. Okay, 2 pretty just choppy bars. So you could have said, hey, I'm going to give it to the first, bar low, which was 106.81. So you could have been out of it there. There are some people who said, hey, I'm going to short it here versus a high and add to when it breaks there. And then it did it again, okay, before making another move lower to where there was some support where it kind of tried to stop but didn't. So some gaps get filled, and the way you judge whether gaps get filled is by looking at the relative strength. A lot of things made new highs in the first 5-15 minutes. Amazon did not, and then it started to break down. So this was probably one of the second stocks to break down. The other one was NVIDIA. NVIDIA shouldn't have been really a surprise. I think a lot of people made some money actually short this. Why would they have been short NVIDIA? Because if you look at the way it opened or closed on Friday, it showed relative weakness. What do I mean by relative weakness? Well, here is some resistance, okay? On Friday, it closed below this little 3-day range. So it closed in the dead lows. So a bit of a move up, okay? In the morning, it was up like $1.50. The question was sellers going to come back? So, someone who was short this overnight who said, oh my goodness, the futures are up. Oh, I don't care. This was weak on Friday. I'm going to short more. Shorted more. You could have added when it went through 153.22. And then I did send out a tweet saying, if you shorted the open or shorted below 153.22, look at the 21-day around 149. Well, hey, if you knew the 21-day was down there and it hasn't been below it, that could have been your spot to either get long or cover a short. Okay, and it wound up bouncing off that. But you go to your 5-minute chart in NVIDIA. This was one of the first things to go red, which it's been one of the leaders, obviously, of high beta tech. So all in all, it's good to know what other things are doing because sometimes it leads other names down. And right here, this NVIDIA gapped up into prior resistance, okay, where it broke down from, okay, and then put a little bit of a wedge type pattern here in the first 30 minutes, and then you could have said, hey, I'm going to give it to 156.60 if you tried to be long, or say, hey, I'm going to short it here when it breaks this. That's going to have continuation to the downside because it was weak on Friday. This actually was a bit of your H cell setup where it's weak, comes back into resistance. You could short some into resistance, and then when it broke Friday's low, look at the move lower, boom, 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 before catching the 21-day. So there are definitely ways to navigate if you know these type of these type of setups, and you have a plan A, B, and C. Okay, and then you go elsewhere. Google was a great long for some of you guys on Friday, and same thing with Netflix. And then today it opened up, gave you some follow through, and that was a day and a half trade. It could have opened up, held the gap, and continued, or it could have did what it did, which was fail. So you look at Google, okay. Now it's a little different, right? Why is it a little different? Because here you had your nice trade, right? This was a nice trade for some of you guys. You guys said, hey, I'm going to buy it above 980. I need to take it overnight or not. If you bought it over 980, it closed at 986. That's $6 for a day trade, pretty good. Then it was up $5 pre-market. This was your resistance, which was the 4-day upper flag. So it was good to know. Or you could have said, hey, I'm going to, 986.62. That is Friday's high. If I'm playing for momentum for it to continue, it's got to hold above a momentum level. What's a momentum level? Friday's high, which is right there. So it gapped up. Okay, so you could have sold some into strength, and then boom, what did it do? It did not hold the momentum level. So some of you guys could have said, hey, you know what, this wide range bar just came up into prior resistance and sold. It's more of a short than a long. Some of you could have said, hey, I'm long from here, selling some strength, can't hold 986.62, I'm out. Or when it went red, instead of now this wide range bar just engulfed this entire range, and now it's in jeopardy of actually filling this gap to the downside. So now this one bar, to me, looks more powerful than the rest of these, so that would get me out. Last time that happened, nothing went down. This time, maybe it does, maybe it doesn't, but at least it could have got you out of it, and at least you could have had your pivots to sell your strength and make your money from overnight and not care about this. Or if you were looking for a short, went below 986, you could have shorted versus 990. I know that's $4 worth of risk, okay, but look at $4 versus what wound up being could have been a $15 trade if you were looking to be short. So there's lots of ways you could sell into strength and reduce or salvage more shares based on having your pivots mapped out and watching other stocks within the same group. Not every group sold off today. The banks got a little bounce, but big deal. Okay, if you look at the banks, you look at the XLF, trying to be a little relevant, I guess. Why do I call it a little relevant? Well, it's somewhat still above the 50-day. So it's still above this, it's still above this. I don't know. To me, I didn't go back to it just because of the action, but it looks like if it could hold this, maybe it could pop up, but again, it's not very compelling to me. The small caps, what'd you do today? Hung in there, okay. You know, you look at this overall big range, okay. At this point, still looks okay, I guess, right? Here's support. As long as it holds this, maybe it could be long, and we'll see if it continues. For me, you know, what I saw in tech just got me not interested in much else until tomorrow, until I get some price discovery. I did forget to go over that Netflix, because Netflix, I did tweet at you guys. You can look at Redler. I haven't been tweeting on my public Twitter feed a lot. I do all Redler All Access intraday, because that's the new, not philosophy, whatever it is, the new mandate. But whatever it is, I felt like, you know, it was Friday. I wanted to give you guys a trade that I was doing, so I said I'm going to be buying Netflix above 155 or 155.5. I was in it. And then today, at 158 or 159, I'm like, I'm out of it. Just a day and a half trade. Why was I out of it? Because other tech started to get weak. And this is, to me, sort of still a kind of a brokish name. Not brokish or broke in, but, you know, this was your hard move down. Here was your calculated long. Okay, why was it calculated? Because it got above this 155. It probably squeezed some shorts and got some guys who look at charts like me to get in. So my thought was it could probably get back up to old support that could turn into resistance right here. Didn't quite get there. So sold some strength. And then when I saw NVIDIA go red and I saw Amazon get pressured, I was like, hey, you know what? This is a nice little trade. I'm just going to move away. You could have also said, hey, I'm going to get out of it if it gets back below a momentum level. Remember the momentum level I told you with Google? Well, the momentum level here is 158.19. So it went as high as 159.97. You could have trimmed some above 159. And then you could have got us some when it went back below 158.19. And now you figure out what's next. But that's how you use these pivots, again, to navigate your tier size. So in conclusion, we still have a long week left. Sometimes they shake the tree before they run them, I guess, because they want to get guys like me who had 6 positions looking for a markup ride out. So I'm out. Or maybe today means something. We'll know more tomorrow. But for me, it's been a great month, a great quarter, great 2 quarters. I'm not going to flip a coin based on an opinion, because the chart right now of a lot of these things are telling me there are some vulnerabilities, but obviously not enough conviction for me to be short. So I'm just out of the way, and I'll figure out how to put together hopefully some P&L tomorrow. So tune in, and I'll help guide you through that. Hopefully you did well. Have a good night. Hopefully you learned something, and I'll see you tomorrow morning. Bye-bye.